What possible effect could this have on the economy and, for that matter, on some of the stocks of these companies?
Well, certainly in the near term, it does look like there's even more uncertainty about healthcare and the government's role in healthcare, which is probably a negative for insurance company stocks, particularly also when we think about the fact that it looks like some of those cost-sharing subsidies will be going away. For the economy at large and for households, we need to think a little bit about what does this mean for the overall quality of plans. In a sense, there may be more choice with these smaller plans coming online, but those will probably be lower quality choices.
But it would be less money going from the federal government, it would appear, into the healthcare system.
Yes.
All the things being equal, that happens, then it doesn't affect it well. And it's an important driver in the economy overall. It's a big chunk of the U.S. economy.
Absolutely. It's a big chunk in terms of the health of households, but also when it comes to inflation numbers as well. Healthcare is a significant driver of the overall inflation numbers.
I also want to pivot onto, we have bank earnings trickling out over the last 2 days, and to talk about what they've said about loan growth. It seems like the FIC issue is part of the past. It feels like now credit quality of the consumers are really front and center. And I want to play for you what Marianne Lake said, JP Morgan CFO, on the call yesterday.
We absolutely expect at some point that we're going to see normalization of credit. We haven't seen that yet. I just want to make that clear that, we are appropriately cautious and staring at everything, but we're not seeing any deterioration or any thematic fragility in our portfolio that we're concerned about at this point.
Nonetheless, we saw increased reserve in the consumer unit, $300 million for JP Morgan, over $500 million for Citi. They said it was faster. Bank of America much lighter at $167 million. Where are we in the credit cycle?
I think it is starting to show its age a little bit. What I've noticed is that overall consumer delinquencies have stopped coming down. They've stabilized a little bit. There has been some continued increase in consumer leverage. So these are some things that we need to watch carefully. The deleveraging of past years is behind us.